Hi, this is Charles Kelly, Money Tips. Inflation is rising again, not only here but in other countries, and that I think is dashing the hopes of lower interest rates and more interest rate cuts, in particular by the Bank of England here in the UK, as inflation is creeping up again. I just want to show you a chart here. Okay, here is a chart showing the interest rate rises since 2022. And you can see here that in February, it dropped to 4.5%. And many people saw this as good news. They thought, well, we're heading now for lower interest rates in 2025, particularly those hundreds of thousands of people coming off of fixed rates, which were set at, say, 2% and jumping on to 4 and 5%. And I've been through this myself on buy-to-let mortgages last year. But the Bank of England cut base rates from 4.75 to 4.5 in February, and it was their lowest rate for 18 months. And it sort of raised hopes of further cuts. Mortgage holders, particularly property buyers, were hoping that the Bank of England would continue on this downward spiral for interest rates. Also to stimulate the economy because the economy is barely growing in the UK. Obviously, the higher interest rates affects the economy. It affects everybody. It affects how much money you've got left in your pocket to spend after you've paid your mortgage. It affects your landlord if you're renting. It affects the businesses all around us who are borrowing money and, maybe decide not to borrow, not to expand, or just paying higher costs on their borrowing. So it affects everybody, the economy. And this is what the Bank of England have done. They've slowed down everything. So that's the position in the past. Just quickly out of interest, how do they make up these inflation figures? Because a lot of people say, well, I think prices are going up much faster than 3%, which it now is. It's gone up to 3% and it was down as low as 2% at the end of the last government. The previous government is now creeping up again. It's now 50% above the Bank of England's 2% target. So that's bad news because the Bank of England likes to reach their targets. They want everything to be this 2% figure that they kind of made up. But how do you make up these inflation figures? It comes from the cost of from the Office of National Statistics. It's basically an increase in the price of something. For example, a bottle of milk, a loaf of bread. So they take a basket of products, and for instance, now hand sanitizer here is now out. These products change. So the hand sanitizer is now out, air fryers are in, vinyl music. I don't see that makes a huge difference to people's lifestyle in general, but other things are gone out like sofa beds. So you've got rice cakes, all these things that they do change. So it's a basket of goods that make up the consumer prices index. Okay. So inflation is based on these things. What drives it? Well, a growing economy, if it's a fast moving economy, that can drive up inflation, but we haven't got that, right? Things like wars where maybe oil prices go up or energy prices go up, that can affect inflation. But also the Bank of England's continuous money printing or quantitative easing would also affect inflation. And we've seen Rachel Reeves borrow more money since she came to power, spending more money. So that will all have an effect on inflation. So they can't blame a war in Ukraine at the moment. So they've got to now look for it themselves, but look to themselves. So inflation, you got another figure here. UK inflation at 3% in January 2025. So you see how it's jumped here, right? You can see that it was down as low as less than just under 2%, and then it's jumped up to 3%. It doesn't sound a lot. What's 2%, 3%? But it's still 50% more than the Bank of England would like. And this is, there's various reasons why prices are still rising. I've got my own views on this, but we know that the prices in the supermarket have sometimes doubled and trebled on basic things that we buy every day. So sometimes a lot of people look at these figures, say 2-3%, that's just nonsense. And I know this myself. I go shopping and I thought, why has that gone up? This a year ago was, £2, now it's £4, or it's £10, now it's £20. Going out to in restaurants to eat now is horrendously expensive in London compared to what it was. I mean, you won't get away with less than 50-60 pounds a head. I was out in London with a friend the other day. All right, it was a nice restaurant in Covent Garden, but all we had is steak and kidney puds with a side veg. They don't give you veg, so you have to pay £5 for a tiny few strips of broccoli and bottled water. And it came to I think it was £60 each per head, £65 per head, and we split the bill. And that was without wine and drinks, and oh, we had coffee and tea. So, it's still quite a lot of money. So we know that things have gone up a lot in price higher than, they think. So now you can see a comparison here, interest rates and inflation. You can see here that inflation is creeping above here. So the government, the Bank of England. So what will the Bank of England do when they meet on the 20th of March? Well, to me, it looks like they will not decrease interest rates and perhaps will wait. And I want to show you an interesting article in The Guardian here. And this is the Deputy Governor of the Bank of England. These guys that live in their ivory towers and print money and that sort of thing. And it says, Bank of England must proceed with caution over future rate cuts, says Deputy Governor. So what does that tell you? It's saying, well, we're probably not going to decrease rates or cut rates. And he used this mountaineer analogy, like mountaineers. We must proceed cautiously like mountaineers as they cut rates in the months ahead as inflation risks rise. This is Dave Ramsden, the Deputy Governor of the Bank of England. He made a speech to the Stellenbosch University in South Africa. I don't know what he's doing there. He's a climber himself. He returned to this mountain analogy previously used by the Bank of England's chief economist, Hugh Pill, to describe the path of interest rates. Ramsden said, look, a gradual and careful approach is always needed on the way down the mountain. So they feel that they peaked at the top and now they're on the way down the mountain to ensure a safe descent and a successful outcome. But that doesn't mean that the descent has to be slow. So I don't know what he's saying. He's saying cautious, but not slow. The circumstances when slower than expected is justified when there will also be times when conditions require the pace to quicken. So it's all this shrouded sort of talk. I don't know what they just obviously they have to meet. They have a committee of people that meet in March, 20th of March, and they will all decide between them. Some will vote for a cut, some will vote to keep it at the same. I think 0.25% hardly makes a difference when you're cutting rates by 0.25% here. It's just like nothing really. Most lenders have sort of factor this into their fixed rates anyway, so it hardly makes any difference. But anyway, so what is going to happen? Now, the Bank of England said they're expecting inflation to rise to 3.7% later this year. Right? They're expecting inflation to rise to 3.7%. And average weekly earnings growth will be 6.75% in the first quarter, much higher than previously expected. We've also seen train fares go up by over 4%. So we're seeing lots of things that will affect. Now, when we thought there would be peace in Ukraine and maybe we'll all get cheap energy again, that seems to have gone out the window after this extraordinary bust-up between Trump and Vance, JD Vance, and Zelensky arguing like almost having a stand-up row in the Oval Office. You disrespected the Oval Office, and you haven't got the cards to play. You can't bargain. And Zelensky's like, I'm not here to play cards. And then he apparently got thrown out of the White House and went back on his car and flew away. And now he's back in Europe, where I think he feels much more comfortable because yes, we'll support Ukraine, we'll support you, this sort of thing. But without America, I'm not sure what they can do. So the idea that this war was about to end within weeks seems to have come to an end. So that could affect inflation, oil prices, and that sort of thing. I think he goes on to say here, inflation is likely to reach 6.75 because of the evidence of recent months. I no longer think that the risks to hitting the 2% target sustainably in the medium term are to be to the downside. Instead, I think they are two-sided. Don't ask me what that means. Read it yourself. I mean, these guys talk in riddles. They're in a different world. These guys in the Bank of England. So there you go. That's what I think at the moment's happening. Don't hold your breath for an early cut in interest rates. But the property market is sort of ticking along, I guess. I know people have been trying to sell a property for a year at the higher end of the market in London. But the chief economist of the Nationwide said, oh yes, well, yeah, activity was down by 6%, which was modest, modest. Activity was down last year by 6%. That's modest, he said. But these guys and the estate agents and the banks, they're always trying to talk up the market. But we know that the property market is largely driven or held back by interest rates. So if people can't afford mortgages, they will not be able to buy the property of their desire because the bank will say, no, you can't afford this. Interest rates are high. What you might have been able to afford a couple of years ago when you didn't have the deposit, you can no longer do because we've increased rates. So they base it on affordability. There was talk from Rachel Reeves saying that they would get the bank to ease their criteria on mortgages, making it easier for people to borrow more money. But I haven't seen that happen yet. So I'll be interested any mortgage brokers out there who feel that that has changed. I know myself that getting a mortgage at the moment is a bit of a nightmare. It's so difficult. The lender's asking 100 stupid questions and then they come back for 10 more later on. They all seem to be a bit nervous about lending. And this is where there's plenty of equity and there's plenty of safety margin there. They're still asking a lot of ridiculous questions. So we'll have to see. If they ease lending restrictions, I think that could be a tremendous boost to the market because people will be able to go out and borrow more against the property they want. Yeah, I know people say, well, you've got to be careful, you don't want to see a boom and bust and that sort of thing. But I don't think the boom and bust is always caused by people borrowing more money. Sometimes they're outside external factors. In the 2008 crash, a lot of it was down to the crazy lending they did in America to people who previously couldn't afford mortgages. And we saw that spill over to here, this reselling of mortgage debt many times and these sorts of things. It wasn't really about people that had borrowed money and couldn't pay their mortgages. It wasn't that type of mortgage recession. I've seen that in the past, of course, when interest rates went up to 16%. But I don't think in 2008 it was down to people who said they'd over borrowed and couldn't afford their mortgages. In fact, repossessions have not been that high compared to previous recessions, which I saw in the 90s, where there were a lot of repossessions. So I think there is room to ease restrictions and allow people to borrow a little bit more because they're still paying less on their mortgage than they would do in rent. So I think that's a good thing if they can implement it. They're also talking about easing planning restrictions to see more properties being built. That will be good. I'd like to see the government build more council houses and stimulate the market in that way. So I think from the Bank of England, we've got maybe some not so good news in that I don't think they'll see a drop in interest rates by that much in the coming months with inflation expected to rise and is rising. But long term, hopefully things will improve and we can see lower interest rates and a better economy for us. What will happen in places like Ukraine and Israel, we shall have to see. All we can hope and pray for is that we'll see peace and a bit more stability in the world so that we can all get back to doing things that we did before energy prices doubled and trebled, because they are going up again. That's another thing that will probably affect inflation. They are likely to rise. Well, they will rise because the energy price cap is rising soon, I think in April. So we're going to see a rise in energy prices possibly. So now maybe is the time to fix your rate if you're in the UK and before prices go up. So thanks very much for listening, and I'll see you on the next episode. Charles Kelly, Money Tips. Bye for now.